Welcome in. I'm Hal Resnick.
And I'm Brian Resnick. Thanks for joining us back in the conference room for another episode of Real Estate with the Resnicks, the lender perspective.
We're very happy to welcome our friend Brian Kessler to the conference room today.
Thank you guys for having me. Very happy to be here.
It's great to have you, Brian. We've had the honor of knowing you and working with you for a long time, but give us a quick bio so the audience knows who you are.
Sure. My name is Brian Kessler, as you gentlemen said. I work for a company called Direct Mortgage Loans. We're a local mortgage lender out of Hunt Valley, Maryland. I've been in this business for about 23 years now. Live in Baltimore City, have two wonderful kids, and just love what I do.
That's great. I would consider you an expert in Baltimore City. And from a title standpoint, Baltimore City has a number of crazy, unique happenstances, challenges, what have you. Similar from your standpoint?
Sure. Probably the biggest one that a lot of out-of-state lenders don't get is ground rent. So ground rent really is not a problem for the lending world, but for some reason some lenders make it into one. But ground rent's one of the challenges. I'd say the other one is property taxes. Baltimore City has the highest property tax rate in the state of Maryland. And that's another thing I see lenders miss out on a lot is underestimating the property taxes. But when we're qualifying a buyer and they want to know what their expenses are related to their home, that one's super, super important so that they're not getting surprised down the road with a higher tax payment than they were expecting. The other thing that's great about Baltimore City, since we talked about a couple challenges, Baltimore City has a lot of grant programs, more so than any of the other counties in the state of Maryland. And these are true grants that are forgiven over 5 years if the homeowner stays in the home. There's everything from the Live Near Your Work program, which is a program that functions with participation from local Baltimore City employers in cooperation with the city of Baltimore, Maryland. There is a first-time buyer grant that has income restrictions, but it's meant for, low to moderate income buyers. There's a vacants to value grant. So the focus on that one is houses that were previously vacant that have now been restored and brought back to life. So just a lot of different opportunities out there. And probably the most popular one that doesn't have much in the way of restrictions is the Buying into Baltimore, which is done in cooperation with Live Baltimore, where the homeowner takes a tour through certain neighborhoods in Baltimore City, and then the first 20 or so people that go under contract following that event are eligible for $5,000.
That's great. Now, I mean, Baltimore City
really good information.
Transactions definitely have their own unique set of hurdles, and it's great to know that they have all those different, and there's probably even others that you haven't even talked about, different programs, different grant programs. So it's always a great idea when no matter where you're buying, work with somebody who's a local expert. They will help you with all the challenges, and they'll know what kind of programs there are for you. So wherever you are, wherever you're buying, wherever you're well, I guess you're only refinancing where you live, but wherever you're buying, make sure you work with a lender who knows that local landscape.
Yeah, I couldn't agree more with that. And I'll throw another thing in that we've seen a lot lately is we're in a competitive housing market right now. And what works out very well for me is I have been doing this 23 years, so I know a lot of realtors in the area, and sometimes that's the difference between getting a deal done and not. When you're coming in with an out-of-state lender, or no disrespect to credit unions, sometimes realtors know that they may not get the same responsiveness, that there could be more room for error, so it gives them a little more reassurance and comfort working with a local lender.
That's a great point.
Yeah, absolutely. We were just chatting off camera about the market. What are you seeing right now on the front lines? I know you're not a real estate agent, but you like us deal with the real estate agents on a daily basis. What are you seeing come in?
It's still very competitive, and some places more so than others, but we're seeing multiple offer situations. I had one that closed a few weeks ago where we beat everybody out, but we were one of 11 offers on the same property.
Wow.
So
Amazing.
if a property's coming on the market and it's priced right and it's in good shape, it's getting a lot of attention. Other areas, some things are sitting a little bit more. So you might still be able to get some sort of closing cost help from the seller. It's really all over the board, but anything that's super competitive, everybody needs to put their best foot forward. We're still seeing offers going out where the buyers are waiving contingencies, such as their financing contingency, appraisal contingency. They're offering shorter closings. We've done a number of 2-week closings just because that was what pushed us over the edge to getting the deal done. So it's really getting creative out there and doing whatever you can to make your offer stand apart from everybody else's.
Yeah, those are all great points. I mean, and as a loan officer, obviously the question that everybody wants an answer to is, do you think we're going to see any sort of interest rate relief soon? I mean, what is your crystal ball telling you what's going to happen over the next year?
That's a tough one. I would like to believe that, yes, we will see some relief. Obviously, with this conflict in the Middle East right now, prior to that, rates were just below 6%, which was the lowest we had seen in a few years. Now they're sitting closer to the mid to upper sixes, depending on your scenario. I do think if we can get a peace deal done over there, that should help bring rates back down. But there's still a lot of variables. Inflation is a big one, which has been going up and up because of what's going on with oil right now. So it's really hard to guess. I know Fannie Mae, Freddie Mac, some of the other big players in the industry came out recently and pushed their estimates for rates to the higher end, at least through this year and into next. But again, I think if anything we've learned over the last few years is even the experts don't really know. If the fundamentals come back into play and things settle down over in the Middle East, hopefully we should see some lower rates.
And it seems like one of the other variables that seem like the numbers seem very confused are the unemployment numbers. I mean, they rely heavily on them, but then they're adjusting them all the time.
Yeah, we laugh about that. It's you get numbers one month and the market reacts often drastically, and then the next month they're revised, whether it be higher unemployment or lower job creation, whatever the case may be. But at that point, the damage is already done in the market. So yeah, it's been a challenge.
Nothing like throwing darts to figure out an interest rate.
That's right.
Yeah, pretty much.
Close your eyes and make a wish.
Yeah.
We've all been doing this long enough that we've seen rates, in the 6-7%, and we know that that's not historically high. You talk to my parents; their first interest rate was 14%. So I think rates where they are right now really is still historically better than where they've been. Do you see that people are starting to accept sixes, sevens, even, I guess high fives, low eights? I mean, I've seen them across the board. Are people adjusting to that?
Yeah, over the last few years, I think the highest we saw was in the low eights.
Yeah.
And things definitely slowed down a little bit. But there were still people buying houses. People still need to move for one reason or another. So it's still happening. We've been closer to 7 or lower for at least a year now, I'd say, if not longer. And, even I just had this conversation yesterday, just talking about the market right now. The spring market seemed a little slower than I was expecting at times. Mm-hmm. And I think that was the initial fear setting in about the higher rates and people taking time to kind of digest that. But I've seen things pick up tremendously here in the last month. And I think that's a big part of it, is that people are accepting, hey, rates aren't coming back down to the fives, or at least not right now. Still got to move. We still got to do stuff. So we're having a nice little bump in business here for early to mid-June that we otherwise might not be seeing. And I think that's because people are starting to accept where rates are.
Okay, are most of the rates you're seeing right now points, or are some rates now being given without a point charged up front? I know there was a time where there was points were definitely being charged. I think it's not the same anymore.
Yeah, I think it depends on the lender. There's certain big box lenders that every quote they send out has points. I guess my pet peeve is that in most cases they're not explaining to the client what that is. So points in our world, if we're charging points, is to get them a lower rate.
Good.
So some of these lenders will throw a lower rate out there, but they'll throw a couple points in there, and it's not till you really dig into the estimate to see, oh, wow, I can get this lower rate, but I got to pay $4,000 or $8,000 up front to get it. Does that really make sense? In most cases, I'm not seeing too many people paying points right now. If they are, it's generally a portion of a point, like maybe an eighth or a quarter point, because that's going to get you to that next lower rate. But most people are opting for no points, trying to hold on to as much money as they can.
So when these big box banks are giving out their estimates and they're just throwing points on there, I mean, they're doing that really without even looking at a borrower's creditworthiness. So once they actually look at the documentation, they may need to charge even more points because of the borrower.
Yeah, it's just their business model, and it's really. As someone who's been doing this a long time and lived through the credit crisis and bad practices from a lot of lenders out there, it's a little disappointing to me to see, because they're just not doing a good job educating the consumer. They're not being transparent. And a lot of times I'm sure it's working for them. The consumer is not getting someone like me to come and say, hey, let's get a second set of eyes on this. And they're taking just what's being offered to them, and it's not really in their best interest.
Yeah, and we know that interest rates definitely have an effect on the real estate market. I mean, higher rates usually, and obviously we're seeing a little bit of an anomaly now, but higher rates usually mean that there's fewer refinances, and in the past we've seen programs like adjustable rates pop up or shorter terms step in to help borrowers kind of in that interim period until things ease up again. higher rates also typically shift the power dynamic from what we see from a seller to a buyer. So with less competition out there, the buyers can usually put in stronger, more strategic offers, and they can, try to demand more from the seller as far as concessions go.
Yeah, and like you said, there's a unique market. We're not seeing quite as much of that, and I think that's because the other factor is low inventory. So when a really good house comes on, there's just enough buyers out there. Still, I think there's some pent-up demand, so it's taken away some of that power. And that's one of the things we talk about when I, meet with a buyer is, what is our plan? Are we ready to buy a house now? Are we trying to wait for something, whether it be saving more money, or the one that comes up the most is I want to wait till rates come down. Mm-hmm. Well, the challenge with that is as rates come down, if they come down, let's say back into the upper fives again, we've seen this every single time that rates come down, more buyers flood the market, which makes it more competitive, and that's helping the market stay where it is, and in some cases creating these bidding wars where people are bidding well over the price of the house. I have someone who is potentially putting an offer on the house today that's around a $900,000 house, and they're already talking about bidding $200,000 over it. Yeah, which is, to me, it's like funny money. It's insane, but if people have the money and they really want the house, that's kind of what happens. So It's still... The sellers are still holding court at the moment, it seems, more so than buyers.
You got to do what you got to do. Yeah, it definitely seems like this is still a seller's market. I mean, no doubt in most places. I can't even imagine buying a house and waiving in inspections. No, it just seems dangerous. But what do I know?
Right. Yeah, it's crazy to me. It definitely goes against everything I always believed growing up. But I'm glad I'm not in a position right now where I have to buy a house right now.
Yeah, it's everything that we learned, growing up in the industry. It's
the opposite.
Yeah,
correct.
Yeah,
it's opposite of what we learned, and the absolutely opposite.
Yeah.
Whether we're in a buyer's market or a seller's market, one thing will always hold true: the lenders, the title companies, the realtors, we all need to work together to get the deals to the table. Brian, what do you expect and need from a title company to ensure that a transaction stays on the rails?
That's a great question. I think with any party, but especially the title company, with us, it's communication. Quick communication, clear communication. When issues come up, I just think it's of the utmost importance to communicate those things earlier than later so everybody has time to respond to them. I think turn times on title work is important. You guys have always done a great job. As you know, we've all worked together for a very, very long time, and there's a reason for that. Not everybody turns things around too quickly. Not everybody's as flexible. Not everybody communicates well. So I think that's a huge, huge factor in a successful real estate transaction for buyers, sellers, for all parties, frankly.
Absolutely.
Community Title Network really does a good job, and we have a strong commitment to try and get title work out to lenders as quickly as possible. I mean, we're trying to be between 3 and 5 days. We want to make sure that everybody's on the same page. If there's any issues, we start to address them immediately. We want to make sure that once we give you title work, if there's still something we're resolving in the background, we're moving forward, simultaneously. Because if we can't do that, we're not getting to the settlement table in time. If I get you things delayed, you're not going to be ready. If I can't get to the table, if I can't get to the judgments to be resolved, I can't get to the table. And then the buyer's going to blame both of us. So, it really behooves us to really do the best we can to stay on top of communication, stay on the same page with everybody, with the real estate agents, with you, with the buyers. It really does make sense to work with a team who has been together a long period of time and knows each other and knows how the other operate.
That's great. I mean, I take comfort, and it makes my job easier knowing, sometimes an issue comes up before we even get under contract, and I'm like, all right, this is something that could be a challenge. Let me pick up the phone and call Hal, or let me call Brian and flush this out, and that's always been a great resource for us. So it works on many levels.
Yeah, it's funny you say that. One of the things is I get the ground rent question all the time. Is this property have ground rent? And as we discussed earlier, and again, some lenders don't really understand this, and you already know the right questions to ask. Is it registered? How are we going to deal with it? Are we able to find the ground rent owner? Those are things that we have to go through the process of figuring out to make sure that this all runs smooth and there's no holdups with that part of the world that keep us from getting to the settlement table on time.
And it's funny, you said a lot of lenders don't understand ground rent. I would say a lot of people don't understand ground rent. Even the people that live in Baltimore City and have ground rent, they don't understand it.
That's fair. That's a fair statement.
So obviously we just talked about the lenders and the title company have to work together closely to make sure that we get the deal to the table, to make sure there's no speed bumps and no problems. But what advice do you have for borrowers? What can they do from the first day to help you get through this process smoothly?
Yeah, it's being upfront, it's being on top of everything, being timely with providing documentation. So when we do a pre-approval, oftentimes people start with an online application, which is great. It gets all the basic information in. We have our team call and go through that information, because if you just take it at face value, that's where problems can really pop up later in the process. But making themselves available to answer those questions and then providing their documents up front. The standard documents we need our 2 most recent pay stubs, 2 months of bank statements, 2 years of W-2s. If they're self-employed, 2 years of tax returns. So getting those things up front so that we can really make sure that they are bulletproof. So when they get out there and they find a property, they're not going to have any issues. One of the shifts we've made over the last few months is, more so than in the past, we're doing pre-commitments, meaning we're taking a step beyond pre-approval and getting these buyers fully underwritten through underwriting, so they have a true approval that is just subject to identifying a property, getting homeowners insurance, title work, and appraisal if needed. But again, it's the more you can do up front before you fall in love with the house, the better the experience you're going to have. One of the things we see often is buyers go out and look at a house, and then they start thinking about the financing after they've looked at the house, and they can't move quick enough.
Right.
And oftentimes when a good house is on the market, there's a deadline for when your offer needs to be in. And if you're just figuring your financing out once you saw that house, oftentimes you're too late. So it's really doing everything as early as possible in the process so that you're fully prepared. We can have time to go over numbers with you, so if you're going to look at a house at a given price range, here's how much cash you need at closing, here's what the payments look like, all that good stuff. So it just takes a lot of the mystery out of it.
And then what are some of the things that people shouldn't do?
Yeah, that's a great question. I love that one. One is having your credit pooled more than necessary, whether it be by lenders or for other purposes. The other purposes is really the bigger issue. So if you're thinking about buying a house, now is not the time to go buy a new car or a boat.
I was going to say, how about a boat?
Yeah, or a boat, or a limousine or whatever. You want to be as thoughtful about your finances as possible. You don't want to go quit your job in the middle of things. If you are leaving your job, you want to make sure that the job you're taking will still work for you from a qualifying standpoint, similar pay structure. One of the things that people come to me and they're like, yeah, I just started my own business 2 months ago. Generally speaking, we need 2 years for self-employed individuals before we can use their income. In some cases, we can get away with 12 months, but stuff like that, moving money around between your accounts, depositing large sums of money in your accounts, all these things will need to be documented. So the less of that you can do when you're preparing to buy a house, the better off you'll be. And I think the other thing is, people don't talk about it enough, is thinking about a budget. And so that's not necessarily something not to do, but I guess the bigger part of that is looking at your spending and looking where you can cut back to help, free up money for the mortgage and make sure that you're going to have an application that can get approved.
So we talked about the nightmare scenarios on a prior episode. But what's the craziest thing you've had a buyer do through the process, whether you were able to get it approved or not in the end?
Yeah, earlier in my career, I had someone who was buying a house that was being completely rehabbed by a nonprofit organization. They were getting all kinds of grant money, a house for below market value. A really, really good deal. And the nonprofit was taking a little longer than expected to get the house built out. We had this buyer pre-approved. We told them all the right things to do, and they still decided that they were just going to stop paying their other bills so they could save up more money during that time. And so fast forward to the house is ready. We got to update their credit report, and it just wouldn't work. And so, you can tell people all you want the right thing. Some people are just committed to doing whatever they want to do. It was mind-boggling to me. It was very sad. They missed out on an amazing opportunity by just not listening. So, yeah.
That doesn't have a happy ending. That is awful.
No, it definitely, it's definitely tough. So, one of the other weird things I have, I'll share one that did have a happy ending is, and this wasn't anything the borrower intentionally did, but it was something the first time I saw it happen. We pre-approved them. Number of months went by, and we ended up having to update their credit report. And when we updated the credit report, they hadn't done anything wrong. They just hadn't used their credit at all. And it had been 6 months since they used it at all, and their credit scores went away. So fortunately, we structured it where they had enough time to use their credit, get it reported again, get their score back so that we could get them a really good rate.
They listen too good. They listen too good and didn't
Yes,
do anything.
that's exactly right. How backwards is that, right?
That's crazy.
But that one ended up very well for everybody. So
That's
that was score one for the good guys.
Well, hopefully having conversations like this and sharing stories that we've shared and that you've just shared helps other people that are listening to not make these mistakes in the future. Thanks so much for all the great information you've shared and the stories. But before we finish up, let's talk a little bit about Baltimore. I mean, we know it's a city that you love. You live there. You're there all the time. We grew up in the county, but we spent lots of times in the city, going to the harbor, going to Orioles games, Ravens game. But for me, I just don't know that I'd enjoy living in the city or any city, really.
Right. I love it. I've an amazingly strong community down here. I've raised both my kids here. My daughter's still in elementary school down here. My son is no longer in school here just because he went on to high school, but he finished, went through middle school down here in the city. And even when they were younger, like to be able to walk to the Science Center, the aquarium, the B&O Railroad Museum, whereas a lot of people with young kids and they want to go out to dinner or something, they got to load up the car and pack everything they can think of. For us, it was throw the kid in the stroller and walk down the street. It was super easy. But, to your point, Oriole games, Ravens games, I mean, there's a lot of times where the city just feels electric with energy, with cool things going on. We got the big America 250 celebration coming with the Blue Angels and everything, and it's just, the city's a special place. It's like any city, it has its challenges, but I still love it. I really do. It's nice to be able to walk along the water, to live in a city where you have so much waterfront property and everything. It's pretty cool.
I can't believe you didn't mention live music anywhere.
Yeah.
Or everywhere.
Live music's a big one, get to the 8x10 while you still can. There's about 9 more shows left, but
wow.
I hear there might be some good news coming in that regard as well. So, but yes, a lot of live music between the 8x10, which is a venue that's been there since the mid-'80s, Pier 6 Pavilion over closer to Harbor East area. It's one of my favorite places. You can't really beat seeing a concert there on a beautiful night in Baltimore. So the city definitely has a lot to offer.
Yeah, I agree. I'm not sure I could live in the city. I'm not a city person, but I do love the Orioles. I love going to Ravens game. I've seen plenty of concerts in Pier 6, Power Plant Live, when they had stuff that Ramshead was over there. Hal at the Moon, I think it was called, the Dueling Piano Bar.
Oh, yeah.
So seen plenty of things over there that was awesome, and I miss some of them because some of them aren't there anymore. But I like hanging out here, but I don't know that I'm one much to live. I don't know that I'm a city folk.
It's not for everybody. For me, a lot of it comes down to the convenience of being able to walk everywhere I need to get, or to be able to get places super quick.
Yeah.
I don't love being in the car that much, so to be able to walk out my door and have restaurants right there and everything, it's been a real treat.
That's awesome.
Yeah.
I mean, for people that love the city, I mean, Baltimore City, as you say, can certainly be electric at times, and even the times when it's not. When I know you take your morning walks, I'm sure that peacefulness of just the sun coming up over the water is just amazing.
Oh, it's great. It's like the best medicine ever. So it's I wouldn't trade that for the world.
Well, Brian, we really appreciate you joining us today. All the stories, all the information. But before we go, do you have any last minute thoughts or advice, and let everybody know where they can find you?
Best way to reach me is generally by phone, 410-303-2953. You can also just Google Brian Kessler Direct Mortgage Loans. It'll take you to my website. It'll take you to my Google review page. A lot of great reviews there. And listen, I just love what I do. I love working with good people. So that's who I'm looking to connect with. People who want to be guided through the process, who want someone who's transparent, who's going to shoot straight with them and give them good, solid advice. To me, that's what it's all about, and just doing right by people. And that's what's kept me in business all this time. We're very much in a referral-based business, and you got to do right by people to survive. So I'm grateful that I've been able to do that for 20-plus years, and look forward to doing it a lot more.
I agree with all that. Great spending time with you. Thank you very much for joining us. Out there, if you're all thinking about buying, refinancing, definitely find Brian. Have a conversation. Once you're done with Brian, you figure out that you're going to use him, choose Community Title Network to help take you to the end. You can find us at communitytn.com.
Yeah, Brian, thanks so much for being here. On the next episode, Hal and I are going to break down the highs and lows of our upcoming trip. I'm not expecting to have any lows. It seems like it's going to be an amazing trip, and we'll talk a lot about it then. Thanks for being here with us. Please give us a like or subscribe, and we will see you next time in the conference room.
Thanks for having me, guys.
Absolutely.
Thank you.